Hello guys, welcome to another video. So this will be just a continuation of where we left from on the Xauusd analysis and what to expect today. So apparently from where we left from, I was expecting to have some sales, but did not happen on Monday. As you can see, Monday we had serious rejection, and this is why it happened. Um, we had tapped into a daily fair value gap. It was a bullish one, and we tapped on it on Thursday, as you can see. This one here was the gap. Here's the gap here. So price tapped and fell it on Thursday, and as you can see, the body is never closed or in violation of that week, as you can see. I mean of that gap. So the body never really violated that gap, meaning that price was not interested in going lower. And when Friday came and closed back in. Okay, within the range of the previous candle of Thursday. Then Monday just jumped things up. Tuesday went up. Today is Wednesday, and I still expect it to go higher. Okay. Now, the mistake or the confusion that I had here was when I was looking at the weekly time frame. When you take a look at how the weekly time frame of last week closed, we closed bearish. You see, this was last week. So I was expecting that we come down and maybe fill this gap here. Okay, but unfortunately these markets, they switch anytime, they can switch anytime, and it's something that you have to be prepared for. You don't have to be 100% sure, and you'll never be 100% sure with these markets. Never. Nobody has ever done it, because every single 15 minutes, every hour, every 30 minutes, every day, every second, they change. So it's upon you to ride along. When it change, you change. Okay, so that being said, uh, we changed to being bullish. And as you can see, Monday closed above the Friday highs, meaning that the next day was supposed to be going higher. And also, uh, Monday, when Tuesday came in, we closed above the Monday high. So, would you expect on Wednesday we are supposed to be going higher? So today we have some news, FOMC news coming in the next 20 minutes, and this is what I expect, guys. Let me give you this analysis before. And so in case you're entering the trading, maybe you enter now before the news comes in, then maybe you put your stop loss at break even. But remember, trading news is not a good idea. I repeat again, trading news is not a good idea because news comes with huge volatility. And uh, and today, by the way, my internet has been quite messy. I don't know what's really happening. It's like been crazy, and I've been trying to call the internet service provider to check it out, and I don't see if they're kind of giving solution. So this is what's happening here. We already know that we are bullish. Okay. Let me switch to 15 minutes time frame so that I can be able to see exactly what I did here properly. Okay. So I'm already in a trade. I entered from this gap here. My stop loss is just below here. And I want you to note that I'm not telling you the truth where my stop loss is, because for some reason that is liquidity spot. But this is just an assumption. You can put your stop loss below this low here. As much as we do have some, it's kind of a relative equal loss. But remember, this is gold. This is not Nasdaq. This is not indices. So trading, actually, the way you trade Nasdaq is so different with the way you're going to be trading uh, other pairs like commodities and forex and so on. Totally different, absolutely different. You see, with indices, they are more about price action, but with gold, it's more about manipulation. So you gotta understand it, how it moves. But already, as you can see, we had a bullish 15-minute fair value gap here. This was my entry, right? And if you can take a look closely at the consequent encroachment of that bullish 15-minute fair value gap, price has been respecting it, going up and down it, but no candle has come to close it. And remember, on the daily bias, we are very bullish. So what are we looking for? We're looking for buys. So, for example, the way I'm telling you, in the next 18 minutes right now, we're gonna be having FOMC news, and it's gonna be really, really volatile. You see what you see this kind of movement here. Let me say from here, this has just been ranging. This is just I can call it a ranging market. This is just you see, it's been just up and down, waiting for this news to come. So remember again, this is news. Anything can happen. It can come down, take liquidity down here, then push up. But I don't expect that. Actually, I don't even expect this low to be taken. To be honest with you, see this low here. I don't expect it to be violated. Okay, because the damage has already been done here. You know, in trading, this market they usually move in just seeking liquidity. Once liquidity has been taken, yes, another one was created here. There's some people, but I don't think uh, majority of traders would put their stop loss here. Most of them has it down here or here. But you see, the damage has already been done here. We've already filled that gap, and as you can see, price is really, really, really respecting that, and the gold is extremely bullish. So I'm expecting a jump. You can buy from here, put your stop loss here, just from that low. And remember, because it is news, you go with the lowest risk possible, and you can target all-time highs. You can target all-time highs on this trade. Okay, you can target all-time highs. Yeah, right there. That should be around 114. R. Okay, and another reason for buying. This is where we opened to. We opened from, and as you can see right now, we are on the discount area. Okay, this is the consequent and like sorry, this is the equilibrium. So we are currently on a discount zone. So this is what I expect to happen in gold pre FOMC. We'll see what happens, and see you on the next video. That's it.